Welcome to everybody. This presentation brought to you by Focus Solutions that Move Business. This is part 2 of transactions. In this, we would be discussing other transactions. In this, the transaction entry screens, journal entries, petty cash, PDC receipts, PDC payments, purchase returns, sales returns, debit notes, credit notes, interdepartmental Jv, excess in stock, shortages in stock, stock transfers, material requisition request. These screens has been discussed. In order to record the adjustment entries, we use this journal entries document. Let us assume we have to record here depreciation entry. On which date you want to record the entry? Let it be on 31st March 2011. One account, that is depreciation, will be debited, say some 10,000 rupees, and machinery account is to be credited. Here both debit and credit amounts must be same, then only the voucher will be saved. In order to record the small expenses, we use this petty cash document. Here select the petty cash account and select the expenditure account. Just now we have created an account called coffee expenses. So the organization may have spent some amount, that is 500 rupees for this coffee. Those things can be recorded through this document. Next is post-dated check receipts. Sometimes we may have received the check from the customer, but the date mentioned on the check is after few days. So in such cases, we use this post-dated check receipts. Let us assume we got the check from Faraz. We are going to deposit this in HSBC Bank. He has given the check on 25th February, while the date mentioned on the check is 5th March. So that will be the maturity date. Select the customer name from whom we got this check, how much amount we got from customer. Save this. By default, post-dated checks will not appear in the customer's account. When we check the balance of Mr. Faraz, the balance just now we have recorded 10,000 entry that will not appear in this account, as we have not converted the PDCs into actual documents. In order to convert, we use this tools convert matured PDCs to vouchers. After conversion, only those amounts will be reflected into the accounts. So let us convert that PDC. As on which date we have to convert? Up to 5th March, let us convert. Into which document the new entry must be posted, that we have to select over here. So when we convert that PDC, automatically system will raise one document into the actual receipts document. Whichever document we select here, it will be raised into that document. All the entries up to 5th March will appear in this screen. By default, the status of the transaction will be do not post. In order to change the status, we use this select unselect option. So here change the status as post by using this option, then click on convert. Now system will automatically generate one entry into the receipt document. This entry was generated automatically by the system on 5th March. Now when we check the balance of Mr. Faraz up to 5th March 2011, now the balance has been updated. In the same way, we have this post-dated check payments. When the check is issued to the vendor, but the date mentioned on the check is after few days, then we use this post-dated check payments. Next is purchase returns. When the goods is returned to the vendor, then we use this purchase returns document. So here select the purchase account, select the vendor account to whom we have returned the goods. Let us assume we returned one number of LG washing machine to LG India Private Limited. In such cases, so how much quantity we have returned on what price? When an entry is recorded in a purchase returns document, automatically now when we check the balance of LG India Limited, so PRT, purchase return, it has been reflected in the vendor's account. Earlier the balance of the vendor was 1,12,600. Now when we check the balance of vendor, it is only 1,02,600. The vendor balance has been decreased. In the same way, when we check the stock details of LG washing machine, earlier before returning the product, we had 23 numbers of washing machines with us. Now we are having only 22 numbers. In the same way, inventory will also be updated. In the same way, we have sales returns document. When the goods is returned by the customer, then we use this screen to record those transactions. So in sales returns, customer name is to be selected and product. So which product he has returned. Next is debit note. When additional discount received from the vendors or any additional scheme amount received from the vendor, those entries can be recorded through debit notes. So let us assume we got the amount in the form of discount. As we don't have discount account, let us create one discount account. So a vendor has allowed a discount or scheme amount of say some 10,000 rupees on 28th February. So this kind of entries can be recorded through debit notes. When additional discount allowed to the customer, those kind of entries can be recorded through credit notes. Opening balances, already we have discussed this. Payroll postings, we have a separate module for payroll. When the entries are recorded in a payroll module, there we have an option called post payroll entries. Automatically the entry will be posted into this document. Next is Interdepartmental Jv. The purpose of this document is to transfer some of the expenses from one department to another department. We use this document. In this, select the departments to which department you want to transfer the expenses. So let us assume we have to transfer some 5 lakhs from support to marketing. Those entries can be recorded through this document. Next is we have these documents, shortages in stock and excesses in stock. The purpose of this is sometimes in focus it may be showing some quantity while physically they may be having some different quantity. In order to adjust the focus quantity, we use these documents. Let us assume we bought 100 kg sugar, we bought 60 kgs. Now in focus it may be showing that 40 kgs must be with us. While when we check the stocks physically, we found only 38 kgs. So in order to adjust these 2 kgs, we can use this shortages in stock document. So as in focus it is showing as 40 kgs available, we bought 100 kgs, 60 kgs we sold, 40 kgs is available with us. So physically we found only 38 kgs. In order to adjust the focus stock as 38, we use this document, that is shortages in stock document. Here choose the product which you want to adjust, how many kgs you want to adjust, that will be the quantity. Now in a focus the stock will be adjusted as 38 kgs. In the same way, if any excesses are found, in such cases to adjust the focus quantity we use this document, excesses in stock. Next is stock transfers. In order to transfer the stocks from one warehouse to another warehouse, this document is used. Here select the warehouse. Hyderabad issues to Secunderabad. From which warehouse to which warehouse the stock is to be transferred. Select the product. How many numbers is to be transferred. In this way the entry can be recorded. Earlier we had these two numbers in Hyderabad. Now after making this entry, that product is transferred to Secunderabad warehouse. Next is we have a document called Material Requisition Request. This is within the organization. If the stores people, they may require some material for their department, so they will raise a request to the purchase department. So basing on this request, they will procure, the purchase department people will procure the material from the vendors. So this is within the organization. So stores department is using this document to raise a request to the purchase department. Now it's the time for you to practice. So we hope this presentation will be useful at the time of practice.